Welcome to Pit Print by Portafolio Capital. I'm Mal Sanchez with your Monday recap of last week's markets and macro. Let's dive in. Markets had a mixed week with pockets of strength and defensive pressure. By Friday's close, major indexes rebounded off of midweek weakness, the S&P gaining 0.6% to 6643, the Dow Jones rising 0.7%, and the Nasdaq adding 0.4%. But on the week overall, all three ended lower, with the S&P down 0.3%, the Dow down 0.1%, and the Nasdaq down 0.7%. Volatility remained elevated as investors digested inflation data and shifting rate expectations. August PCE inflation came in at 2.7% year over year, up 0.3% month over month, exactly in line with expectations. Meanwhile, personal income rose 0.5%, consumer spending increasing 0.4%, both a bit stronger than forecasted. The data reassured markets that inflation isn't reaccelerating, even as growth and spending remain resilient. Sector performance was split, with tech and semiconductors helping to cushion for the week, while energy and materials lagged. Investors also rotated into defensives like utilities and staples as a hedge against the volatility. Oil Brent settled near $69.55 a barrel, and WTI around $65.20 to $65.72. Both up just 4% for the week, the biggest weekly gain in 3 months, as Ukraine's strikes reduced Russia's fuel exports and Moscow curbed shipments, including a partial diesel export ban. Gold spot prices eased 0.8% to $37.34.58 an ounce by midweek, but still finished higher on the week, around $37.78. Not far from the record highs. Bitcoin ended the week at $113,558, up 1.36%. This week's big data releases. Tuesday, we have ISM Manufacturing and Services PMI. Thursday, we have CPI for September and weekly jobless claims. And Friday, October 3rd, we have non-farm payrolls and unemployment rate for September. These will be key in shaping how aggressive the Fed pursues its next round of rate cuts. That's your Pit Print for the week. I'm Mal Sanchez, and I'll see you next Monday for another pulse on the markets and the macro.